Ladies and gentlemen, good day and welcome to the Bigbloc Construction Limited Q4 FY23 earnings conference call hosted by Systematic Institutional Equities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vipul Sanghvi from Systematic Institutional Equities. Thank you, and over to you.
Thank you, Ryan. I welcome on behalf of Systematic Institutional Equities everyone to this call. From the Bigbloc Construction Management team, today we have with us Mr. Manish Sabu, Head of Marketing and Strategy, and Mr. Mohit Sabu, Director and Chief Financial Officer. We will start with opening remarks from Manish ji, and then Mohit ji will take us through the financial numbers. And after that, we will open the floor for question and answer session. So over to you, Manish ji.
Good morning, everyone. It is a pleasure to welcome you all to our earnings conference call for the fourth quarter of the financial year 2023. Firstly, let me thank Systematic's Broking for hosting the call and also all the participants joining us today for the call. In the interest of those of the participants joining us today who may be unfamiliar with the business, I would like to give a brief overview of the company first. Bigbloc Construction Limited is India's one of the largest manufacturers of AAC blocks and related products manufacturing company, with a total capacity of 825,000 cubic meters per annum. AAC blocks are a superior quality building material which provides unparalleled blend of strength, lightweight, thermal insulation, soundproofing, unsurpassed fire resistance, and highly proficient building capability. AAC is a natural and non-toxic construction material that saves energy and is eco-friendly. These AAC blocks of the company are marketed under the brand name NextBlock, which is a green product for the construction industry. Bigbloc aims to become an unparalleled name in the industry, manufacturing quality building materials that focus on sustainability. It also hopes to aid the construction and infrastructure industry in adopting green and sustainable practices for a better future. Bigbloc has 3 state-of-art manufacturing units located at Vapi and Ahmedabad, Gujarat, and Wada, Maharashtra, making it one of the largest AAC blocks manufacturers in the country. However, with the ongoing capacity expansion, the company will catapult to become the largest AAC manufacturer in India by FY24. Now, let me ask our Director and CFO, Mr. Mohit Sabu, to brief the company's financial performance on a consolidated basis for the fourth quarter of the financial year 22-23. Thank you.
Good morning, everyone, and welcome to this earnings conference call. Let me take you through the performance of the company for the fourth quarter and then followed by the annual results for the financial year ending 2023. For the fourth quarter of the financial year 2023, the revenue from operations were rupees 46.5 crores, which were declined on a quarter-on-quarter and year-on-year basis due to the impact of early Holi festival and non-availability of labor at construction sites. Also, because the Umargaon plant is now 10 years old, we had to do an annual inspection of boilers, which took a week-long period, because of which the capacity utilization was on a lower level. The consolidated capacity utilization was 80.11% in Q4 FY23. EBITDA for the quarter stood at Rs 10.6 crores. EBITDA margin stood at around 22.8%. Net profit after tax was reported at Rs 5.6 crores, and PAT margins for the quarter was approximately 12.04%. For the annual financial year ending 2023, we reported revenue from operations of Rs 200 crores, which grew by 14.2% YOY basis. The consolidated capacity utilization was 83.44% in FY23. EBITDA was reported at rupees 50 crores, which grew by 85% year-on-year. EBITDA margin stood at 25% and net profit after tax was reported rupees 30 crores, witnessing a growth of 87% on a year-on-year basis. PAT margin stood at 15.04%. Coming to the operational highlights, during the quarter, we have successfully acquired a new major client, Shapoorji Pallonji, and have also started supplying to Reliance Industries Limited at their Jamnagar site. We have also received approval to supply materials to the Gujarat State Police Housing Corporation. In our efforts to expand our market reach, we have ventured into new territories of Maharashtra and Gujarat. To support this expansion, we have strengthened our marketing team. On the capex front, significant progress has been made in our greenfield project at Vada plant in Maharashtra. We have initiated trial runs of the machinery in the closing quarter and commenced commercial production in mid-April. As part of our commitment to sustainable practices, we have successfully commissioned a 450 kilowatt rooftop solar power plant at our Umargaon unit. Additionally, we are also soon starting another rooftop solar plant at the Kapadon unit. We also completed the banking tie-up for financing the upcoming expansion in our joint venture company, Siam Cement Bigbloc Construction Technologies Private Limited. Post completion of both the expansions, company's total capacity will increase to 13.75 lakh CBM per annum, making the company the largest player in the country. With these expansions, it will help the company to further penetrate its presence into untapped markets across the western regions and also make it the largest player in India. With this, we can now open the floor for question and answer session. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question comes from CA Garvit Goyal with Invest Research. Please go ahead.
Hello. Good morning, sir. I'm audible?
Yes, you are audible.
Okay. So my first question is on volume side. Our volume have growth 11% CAGR in last two years, but we failed to manage any growth in FY23. Major growth in last 2 years coming from the value growth. So on one side, we are expanding our capacities, citing that huge demand is coming for AAC block. And on the other side, our volumes are telling a different story. So kindly put some color on it and let the investor community know whether this is really an opportunity or are we facing any challenges in the terms of oversupply in the industry, because we were supposed to grow our volumes in FY23 as well, but at the end of each quarter, you gave one or other reason for degrowth in the volume. So kindly put some color on it.
So frankly, there are no issues or challenges relating to demand in the industry. But the thing is, we have planned our expansion at Vada, which we had thought of starting commercial production in March. But because of delay in boiler permission from the Pollution Control Board, the expansion got delayed and it started commercial operations in April. Secondly, in this industry, I think an optimum capacity utilization of around 80 to 90% is considered quite good. So we have achieved a capacity utilization of around 83-84% in the closing year, which seems to be good as per overall industry standards. I hope that solves your query for the capacity utilization in the industry.
Also with Vada coming in this financial year, so from this financial year, we will see a growth on quarter-on-quarter basis. Last year, as the company was already running at optimum capacity utilization, so, there was hardly any scope for growth.
But sir, my question is on the sales volume side. Like you mentioned 84% capacity utilization, and currently our capacity is somewhere around 825, right? So if simply multiply the utilization rate to the total capacity, it comes out to be 7 lakh kind of volume. And we are doing a sales volume of, I think, 4,60,000. So where the gap is currently lying?
So our capacity till last financial year, till March end FY23, was at 550,000 cubic meters, the VADA plant commercial productions have started in mid of April. So now currently our capacity stands at 825,000 cubic meters considering the VADA expansion. Also, the VADA expansion has started production from mid-April, and the current utilizations at VADA unit are somewhere around 20 to 25%, which should keep on growing by 10 to 15% every month, because it's a newly established unit and we need to streamline a lot of things whenever a new unit is commercialized. So we should be reaching an optimum capacity utilization for the VADA unit in the upcoming 4 to 5 months.
Understood, sir. Understood. Means, but in this particular year, what is our volume target then for the entire year? Sales volume target.
So we are targeting a revenue growth of almost 20 to 25 crores every quarter from this particular year.
20 to 25 crores year on year.
In every 3 to 6 months, we should be having a volume growth of almost 20 to 25 crores, considering the expansion upcoming at VADA, as well as the new capex that will happen at VADA, which will be capacity addition from 250,000 to 500,000, and the JV expansion in which we'll be setting up the plant at Ahmedabad unit near Ahmedabad with our JV partner, Siam Cement Bigbloc Construction Technologies.
So that thing I'm understanding. I was asking the total volume target, sales volume target for entire year.
So last year our capacity utilization was somewhere around 460,000 cubic meters.
Right.
And this year we should be able to do around 600 to 650,000 cubic meters plus.
You mean 660? Okay, right, understood. And sir, coming on the realization part, which is dropping down marginally quarter over quarter in last 3 quarters. So how do you look at it, and what kind of realizations you are witnessing in this ongoing quarter, and how these will stabilize in longer term?
So I earlier also mentioned in one of the conference calls that earnings have stabilized. So this is what we see as the current trend for the market, because our capacity addition has also come up. And right now we are maintaining the similar selling price as we are gradually scaling up on a month-on-month basis. And the earnings, the selling price realization should continue to be similar throughout the year.
Is this 4,300 levels will continue in this particular year as well?
Yes, somewhere the range is between 4,200 and 4,300 since the last 3 quarters, and that should continue.
Okay, right, sir, right. And sir, can you put some color on the ongoing rate for?
Sorry to interrupt you there. If you could please join back the queue for follow-up questions.
Okay, right.
Thank you. Ladies and gentlemen, we request you to restrict to 2 questions per participant. Our next question comes from the line of Janelle Kapolia with Emkay Global. Please go ahead.
Yeah, good morning, sir, and thank you for the opportunity. So my first question is, wanted to know on the how is the progress on acquisition that we are planning to do in south and north side, that is some feeder plants?
So the company is actually exploring various opportunities to enter other geographies. So the research and everything is on, and the vision is to make Nextbloc a pan-India brand. So yes, the company is working towards it, and any further updates on the same shall be announced.
Okay. And so my second question is, so are we facing any liquidity issues since recent announcement on ban on rupees 2,000 notes? So are we facing any liquidity issues or?
So practically it does not affect us at all. I mean this ban, and in fact, I think it's pretty good for the organized economy in overall, but it doesn't affect anything for the company.
Okay. And so, give your outlook for next 3 to 5 years, like what's the growth numbers that they're projecting? I mean, how do we see the growth panning out? over the next 3 to 5 years?
So this financial year, the company plans to start 2 plants. One of them at Wada has already started commercial production, and the new expansion at near Ahmedabad shall also start in Q4. And going forward, as I said before, the company plans to have a pan-India presence in this product. So we'll be looking at different geographies, and we shall be becoming the largest manufacturer of AAC blocks in India. So we are quite positive on this product for at least for the next 10 to 15 years.
Okay. Okay, fine, sir. Thank you.
Thank you.
Thank you. Our next question comes from the line of Bhavya Sonawala with Samsa Capital. Please go ahead.
Thank you for the opportunity, sir. Hope I'm audible.
Yes.
Okay. So basically, similar question. Firstly, just want to understand, is the move from bricks to ACC lower than what we have expected, or on similar lines, what you had expected probably start of this year? If you could throw some light on that.
So the movement from bricks to blocks, I think it's steady. Overall, the real estate requirements have been also quite steady and robust. But, as Holi was pretty early this year, there was a shortage of labor at construction sites and even our manufacturing units. So this was, usually this scenario comes in April, but due to, early Holi, this was a scenario in current quarter. Rest, conversion from bricks to blocks is happening pretty fast because red brick availability is also a concern now, and even the prices are pretty high.
Okay, got it, sir. And sir, some light on the bricks and the ECC blocks price parity. How do you see it going, and what is your thought on this?
So I think bricks have stabilized somewhere between 4,500 rupees to 5,000 rupees a cubic meter, depending on the location. And AAC blocks are in between 4,000 rupees and 4,500 rupees, again depending on the location. So yes, blocks are still, I would say, about 10% cheaper compared to red bricks, and it comes with various advantages which we have already discussed before. So yes, I think everything is pretty steady in the overall industry.
Okay. Just squeeze in another question. Most of our sales is direct to customers and construction customers, right? Is it right understanding?
So frankly, almost I think around 80-85% of our sales is to real estate customers, which includes builders or contractors, and around 15-20% sales is for different mediums like the industries or the retail market, etc. And also in this sales, if I would like to highlight a little bit more, is that almost 55-60% of our sales to builders is also routed through dealers. So we have a more comfort towards the payment conditions, and we have security checks as well as CDC from dealers, etc. And the rest of almost 15-20% of the sales is also to corporates, which includes the likes of LLT, Lodha, Unrivaled, Suntech, BG Shirke, Shapoorji Pallonji, as I mentioned, we have recently started. So they end up buying material directly from us.
Okay. Basically, where I was coming from was just to understand when the industry does see a decent move. Do we have a dealer network ready when we work with smaller customers that we cannot directly deal with? So that's where I was just going to understand if we have a dealer network ready.
Yes, we do have our dealer network ready, and I think in the last 2 to 3 years, in fact, we have increased our sales through dealers on year-on-year basis. So, and these dealers helps us to even enter into new geographies. So I think we have the entire network ready and quite robust.
Okay. So thank you so much, sir, and all the best.
Thank you.
Thank you.
Thank you. Our next question comes from Ashish Podar with Systematic Institutional Equities. Please go ahead.
Yeah, thank you, Madan Mohitji. So the question is on your geography footprint. So currently we are present in Maharashtra and Gujarat states. So in the next 1-2 years, what are the growth plans? What are the next regions you are focusing on? And in the next 2-3 years, definitely we are adding so much of capacity. We will need more markets to sell. So what is your strategy on geography footprint expansion?
So frankly, coming down to your question for the geographical expansion, so all of our current plans are installed in the west, and upcoming expansions so far planned are also in the west. So we are done with the western region for the time being, because we are catering into entire western India, which includes the states of Gujarat, Maharashtra, Madhya Pradesh, Rajasthan, etc. Going forward, once we complete the expansion at Vada and the JV capex with SCG, in which we will be manufacturing panels, our vision is to set up a plant near Delhi and another plant near Bangalore. So after that, we plan to have a pan-India presence, and post this expansion at Vada and the JV expansion, we'll become the largest in the country. So we'll have a pan-India presence with the largest capacity.
Okay, and will these plants come in the next 1-2 years, or it's still in the contemplation phase?
So the plants in North India as well as South India also will come in the next 2 to 3 years maximum.
Okay, and last year definitely the numbers suggest that we had a softer year in terms of volume growth. But what kind of large customer additions we did last year, and is there any more in the pipeline in the current year?
So we have already lots of new customers. We have started material supply to Shapoorji Pallonji, the Jamnagar site of Reliance. We have been supplying material to different sites of PSC. We have started supplies to Adani, and rest of the other corporates we already had under our belt. And still we are looking at increasing our customer base, and slowly going forward with the capacity addition, we'll keep on exploring more geographies as well.
So recently we started the new geographies of, let's say, the Nandurbar region, Aurangabad region, extreme north Gujarat, which comes to Disa, and we are supplying good quantities to Mundra. So yes, we are growing both in terms of new customers as well as new geographies.
And the mix you mentioned, will this meaningfully change in the next 2-3 years?
No, we are looking to continue almost on a similar mix, the supply of almost 55 to 60% through dealers, 20-25% to corporates, and rest 10-15% directly to good builders or contractors. Okay,
and last year specifically, when the volume growth was a challenge, did we face anything on the payment or on the receivable side from any of the customers?
We haven't faced any issues in payments or receivable side from any of the customers. And also, one more thing that we are doing to secure our receivables, etc., is we are taking up trade credit insurance also, for which we should be finalizing the same in the upcoming week itself. We have already just negotiating with the insurance companies for the same.
So in that case, majority, all our debtors will be insured. So I think that gives even a good comfort to the company in the longer term.
So currently, is this zero for us, or it's very small for us?
So there are hardly any issues of any bad payments, but just looking at the expansion and everything coming in, we are expanding in different geographies. So just thought that this would be the right thing to do for the longer term.
Okay, great, and best of luck.
Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star, then 1. Our next question comes from the line of Avinash Gorashakar with Profitmart Securities. Please go ahead.
Yeah, Manishji, very good numbers. I think congratulations to you as well as the entire management team. I've got 2 questions. One is I want to understand that on ground, the kind of market we cater, that is the real estate market. If you could give us some color as to what are the kind of signals you're getting on ground compared to last year, current year, what is the kind of outlook you can share with us on the, outlook from the real estate market, because that is a major, customer for our product. And secondly, for the VADA facility which has got commissioned, if you could share with us the next 2 years, what kind of capacity utilization ramp-up can we expect? That is for FY24 and 25, so that we can get a sense of what kind of incremental top line can come from this unit, for the company as a whole.
Sir, the line of the participant has disconnected. We move on to our next question, which is from the line of CA Garvit Goel with Invest Research. Please go ahead.
Hello. Thank you for taking the follow. Sir, in an earlier conversation, you mentioned volume growth of 30% kind of for FY20 and 24. So do we expect the similar EBITDA margins and PAT margins as well, like we did in FY23, or is it going to fall due to the depreciation element coming in, or realizations to fall further? Hello.
Ladies and gentlemen, the line of the management has been disconnected. Please stand by while I reconnect them. Thank you. Ladies and gentlemen, we have the management line connected. Mr. Goel, you could please ask your question.
Yes, sir. So you mentioned volume growth of 30% for FY24. So do we expect the similar PAT margins of 15% we did in FY23, or is it going to fall further due to depreciation coming in for the newer plant?
So we expect a similar EBITDA margins because the prices of the products should remain steady during the year. So we expect similar EBITDA margins.
And what about PAT margins, sir?
So PAT margins also should be on similar lines.
Like newer plants depreciation will be there, like JV coming in H1 FY24, or is it coming in quarter 4 FY24?
Sorry, can you come again?
That JV plant in Ahmedabad, is it coming in H1 to FY24, or is it coming in quarter 4 FY24?
So it should be Q4 FY24.
So that means depreciation will not be there for this particular plant in this year, right?
So if the production starts in Q4,
Okay.
So the depreciation, even if it starts, it will be only for the period for which it is running. So it should not impact much. But the capacity scaling up for each plant will be initially beginning with a 15-20% for the first few months, and then gradually scaling up by almost 10 to 15% on every month basis. So capacity utilization will reach optimum level in about 5 to 6 months of the plant being commissioned.
So on an overall basis, we can assume that margins to sustain at 15% going forward as well.
Yes, sort of.
Okay, right. Understood, sir. All the best, and thank you very much.
thank you.
Thank you. Our next question comes from Avinash Gorashakar with Profit Mart Securities. Please go ahead.
Yeah, Manishji, sorry for the interruption. My call got disconnected. So I had two questions. One is, if you could share with us, what is the kind of outlook you could share, the real estate sector as a whole? Because, this year also seems to be, things are going pretty well for its sector, and I think our company has got a very large dependence on this sector. So your thoughts on the sector, what kind of growth do you see, for the real estate market? And secondly, you mentioned the VADA facility has started from April. So if you could give us some idea that what could be the kind of capacity utilization we expect in the first year and the second year, that is for FY24 and 25.
So again, I think I answered. So real estate, basically we have two major regions. One is towards Ahmedabad and one is towards Mumbai. Ahmedabad and Gandhinagar are seeing exceptional growth, and from 24 stories now they have a permission to go up to 40 stories. The way Gift City is coming up is phenomenal, and also Ahmedabad bidding for Olympics next year. So if that comes in, it can be an entirely game changer. Similarly, even Bombay and Pune markets, in fact, the new Bombay, Thane region, the way they are coming up is fantastic. And I think all the real estate companies are also doing pretty good, and they have good order books as well in their hands.
And just to come down to your query for capacity utilization for the VADA unit, so we started just around a month back, and right now the capacity utilizations are in the range of almost 20 to 25%. And we should reach an optimum utilization of almost 75-80% in the upcoming 4 to 5 months. Post that, we'll take up the capacity expansion at VADA, which will be the addition from 250,000 to 500,000, for which the capex should be approximately in the range of around 18 to 20 crores. And for the upcoming facility at Ahmedabad, also in the JV company, initially we'll begin with a capacity utilization of almost 15-20% on a monthly basis, with a gradual scaling up of almost 70 to 80% capacity utilization by gradually increasing in 5 to 6 months. So we should reach optimum capacity utilization for both these planned expansions and a total capacity of 13.5 lakh cubic meters by end of FY25.
Manishji, thank you for the answers. Just one last question on your joint venture. I believe you all have tied up with a Thailand-based company. So iske bare mein, what is the kind of status? I mean, what is the kind of current scenario, and as decided by you, is the timeline going to be as specific as you mentioned? Can we expect that this business can actually generate significant amount of revenue in FY25? If you could add some color here.
So, the plant and everything is on track. We have already tied up for the financial closure with the banker. And I think the construction at the site should begin anytime in the next 30 to 45 days. We are looking at, productions in Q4. Also, we are bringing in AAC panels as well. We have already done some mock-up. We have imported some panels and sold them in the domestic market. And the feedback has been quite good. But then, yes, people reluctant to rely on any imported products. And thus, we decided it's time to manufacture them in India. So eventually we might start with, a mix of, let's say about 20% panels and about 80% blocks. But I think eventually on month-on-month basis, then this capacity of panels should increase and the block should go down. So the plan is to maybe from this plant manufacture about 60 to 70% AAC panels going forward, and remaining 30% can be AAC blocks.
Okay. I think thank you very much, Manishji, and best wishes to you and the entire management team.
Thank you so much.
Thank you. Our next question comes from Rahil Shah with Crown Capital. Please go ahead.
Hello, sir. Good morning. I just wanted to touch on the top line growth outlook point. So you shared your views on EBITDA and PAT margin, but can you also talk about the top line? So what are you expecting given all the expansions in FY24? So do you expect a similar 15% growth as you saw year-on-year in FY23, or so if you can share your views on that?
So in FY23, we have just commercialized our VADA unit, which is currently running, as I mentioned, at around almost 20%. And it will take almost 4 to 5 months to scale up the capacity to an optimum level of almost 75-80%. So for FY24, I think we should see a top line growth from current quarter itself, but every quarter will keep on getting better because the capacity utilization at VADA will improve and existing plants will keep on at similar capacity utilizations as they were running in FY23.
And so you, in one of the early questions, you mentioned the figure 20-25 crore every month you're expecting. So what was that? Can you revisit that point and explain it? I think I missed that. So was it related to revenue growth or sales? Volume growth, or what was it?
So for the next 7 to 8 quarters, we will be seeing our capacity additions coming in the form of expansion at recently done at VADA, plus capacity addition which will happen at VADA once we reach a capacity of almost 75 to 80%. And the JV plant also will start commercial productions in Q4 FY24. And the point I mentioned earlier was that every 3 to 6 months we'll see a revenue growth of almost 25 to 30 crores. That's what we are seeing going ahead from the next quarter itself.
Okay, no problem. Thank you and all the best.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star, then 1. Our next question comes from Vaibhav Timani, an investor. Please go ahead.
Hi, I have 2 questions. One is on the realizations. Do you expect the 10% price differential vis-a-vis red bricks to continue for, let's say, next 5-10 years, or is it more of a transient thing?
So I think red brick prices went up to almost 5,500 to 6,000 rupees and have stabilized at this level. And the way the government is also basically supporting green building material, AAC blocks, and discouraging the use of red bricks because it pollutes the environment, and the brick manufacturers are eventually shifting away from the city because of strict norms by NGT. I see brick prices further going up in the maybe next few months or maximum a year or 2. So yes, the availability and pricing both on the front of red brick is a concern.
Okay. And regarding competition, given that we have 20 to 25% OPM on average, do you see more organized competition coming up in the industry for AAC blocks and that leading to possible oversupply in the industry in short to medium term? Is that a concern? And if yes, what are your views on our competitive advantages?
So definitely the competition will come in because the industry is doing pretty well. But then the speed of conversion. So basically there is already a growth in the real estate, which must be maybe about let's say 7 to 10%, and then the conversion happens from red bricks to blocks. So even there will be a fantastic growth in the consumption of AAC blocks. So looking at both of these aspects, we see that the margins are quite sustainable. Also, when it comes to when you ask for the competitive advantages, so having the highest capacity in the entire region gives us quite good economies of scale. Carbon credit play comes into a picture which gives us straight away a good effect on the bottom line, and having plants at different places gives us an edge of supplying material to any site through any plant. So we are most competitive. Also, we are now in talks with different raw material manufacturers as well to because the quantities or 4 plants in one region gives us an edge to, negotiate for better quantities or better price. And we have our own fleet now of almost 65 odd trucks. So even that helps in bringing our costs down and also, delivering material on time.
Okay. Thank you for your answer.
Thank you.
Thank you. Our next question comes from Advait Joshi with Raj Services. Please go ahead.
Sir, as you said about the carbon credits, what is the projection for the next 2-3 years in the revenue terms for the carbon credits we'll be getting?
So currently our one project is registered wherein we get about 60,000 odd credits every year. And going forward, all our 4 projects, so the Ahmedabad facility which is already installed at Tapadwans is already, we have applied for the credits. The application for the Vada facility is being done as we have just started the commercial production. And even the new facility which will come up under the joint venture, we shall apply for carbon credits. So anywhere between 200,000 to 300,000 credits we can expect after 2 years. And the current pricing of this credit is approximately somewhere around $3.5 to $4.
Okay, sir. Thank you. That's the answer to my questions. Thank you, sir.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star, then 1. A reminder, if you wish to ask a question, please press star, then 1. As there are no further questions, I would now like to hand the conference over to Mr. Vipul Sanghvi from Systematic Institutional Equities for closing comments.
I think you want to take a question, Ryan, from Rajiv.
Okay. All right. A question is from Rajiv Ranjan with JM Capital. Please go ahead.
Thank you. Thank you. Am I audible?
Yes.
Yeah. Sir, I had one question on the working capital. So, as you told that our business is bifurcated into dealers directly to the builders and to the corporates. So, can you give some thoughts on how different is the working capital through all the 3 modes? Which would be more working capital consuming, and how many days it would be?
So generally, we have some dealers working with us on advance payment terms as well as credit terms. Generally, with the dealers, the payment terms are on an average of almost 45 days. And with the builders and corporates, the payment terms are on average 60 days. But generally, there's a delay in payment recoveries from the builders or from the corporates. It goes up to almost 75 to 90 days also at times. And that's how the payment cycle is working in the industry throughout.
And sir, we will continue to maintain the same ratio, right? 60-65% to dealers and the remaining with directly to the builder and corporate.
Yes, that's how we have streamlined in the last 2 to 3 years, and that's what we continue to envisage and forecast for the upcoming future.
Sure, sir. And lastly, one question like considering our end user, if you can share what would be the percentage in terms of usage of this bricks versus the blocks basically which we manufacture. What would be the percentage? How much percentage this bricks are used and how much of blocks are used for the end user?
85 to 90% of the overall building material must be red bricks, and AAC blocks might be just about 8 to 10%.
And it is currently increasing. Like, do we expect at least the usage doubling for the blocks in the next 5 years from 10% to maybe?
It is definitely increasing on month basis. It's definitely increasing, and we expect this increase to maybe, eventually, so the more productions will also come in, and this percentage of AAC blocks to red bricks will eventually go up.
Sure, sir. Thank you very much for answering the question.
Thank you. Thank you.
Thank you. As there are no further questions, I would now like to hand the conference over to Mr. Vipul Sanghvi from Systematic Institutional Equities. Please go ahead.
Thank you, Manishji, Mohitji, for giving us an opportunity to host you, and thank you all the participants for your questions.
Thank you, Vipulji. Thank you so much.
Thank you everyone for participating in the earnings conference call. Have a good day.
Thank you. On behalf of Systematic Institutional Equities, that concludes this conference. Thank you for joining us, and you may now disconnect your line.